Hello guys, it's Max here from Daily Market Movements, and in front of me we have the gold over the US dollar chart. Now, just before I start today's video, I just want to say a huge congratulations to everyone in the Signal team. We sent a signal out last Friday, I believe, when gold was trading down at 1700. We said to buy gold and target 1740, and in today's trading session we went up and hit that 1740 area. We actually had a session high up at 1740.93. So well done to everyone in the Signal group who managed to capitalize on that trade. Gold, trading up for the third day in a row. We have paired some of our gains. We currently find ourselves trading up at 1732, but not to worry. I do anticipate this to continue. I mentioned it on Friday actually that on Monday we usually see some counterflow in gold, but as of Tuesday, that's when the bulls really start to re-enter into the gold market. So going into the end of the week, I am anticipating gold to move higher. Today is a very important day because we have the Fed minutes. So if the Fed is meeting today and tomorrow, and they are likely to come out and see what they are going to continue to support the markets, because unemployment and inflation are two factors which are very concerning indeed, and are nowhere near solved. So that being said, I remain bullish here for the gold markets. Two green lines on your screens, one's at 1750, the other's at 1800. These are my two targets for gold over the next couple of weeks. 1750, I think, is a given going into the end of the week, or latest by the end of next week. And then 1800 is more a target going into the month of April. 50 and the 200-day EMA are up near the $1,800 level. We did have that bearish crossover where the 50-day EMA pierced below the 200-day EMA. That is what I'm going to circle on your charts now. That's what that blue cross is there. So typically that indicates that that signals for a bearish movement, so a move towards the downside for the medium to longer term. But the short term, you cannot ignore the fact that the previous two times, or the previous three times when we have touched the bottom of this holding pattern, we have rallied higher. In fact, we've actually touched the top of the holding pattern. So if that was to happen now, we could see it move up towards 1826. So that's what I'm anticipating, a move to at least 1800. I think from a technical perspective, it makes sense due to the fact we've bounced off the bottom of this holding pattern. Fundamentally, we still look very, very bullish. Interest rates are at a record low down near zero, and the Fed has told us that they're not even thinking of hiking interest rates, and the dot charts suggest that the Fed won't hike interest rates until the end of 2023, but traders think otherwise. That's why we've seen the 10-year note rising above the 1.6 candle level. So traders think that the Fed have got it wrong, and that the Fed will adjust their dot chart and hike interest rates going into the end of 2022. But I remain bullish. The RSI is just above 40 now, so we still have plenty of territory towards the upside until we anywhere near considered to be overbought. I'm a bull here. 1750 is my target, and then eventually 1800.